Chapter 4, Google Finance. In this section, we'll be going through your new best friend, Google Finance, showing you how it offers some excellent resources for evaluating investments. We'll also be covering how to use Google Finance for creating your own artificial or mock portfolio, as I'll refer to it. Our mock portfolio will be used to practice investing without risking a penny. Before beginning to build our mock portfolio, let's start by walking through the features of Google Finance. First, go to www.google.com/finance. We're going to see a few things right away. Let's talk about what we see, as it can feel overwhelming if you're not sure what you're looking at. Starting from the left side, you'll see the following. Markets. This is your landing page for Google Finance. We will be defining sectors as the categories for industries or markets that share common characteristics. As an example, Nike, the apparel company, can be classified in the retail sector. Another example is General Electric, which can be classified to the utility sector. We'll continue to discuss this in a later section. News. This is one source you can utilize to read some of the top stories regarding the general state of the market, politics, the economy, and more. You'll also have the option to filter the information between the overall market and a portfolio-related news feed, which will show relevant news to the stocks you've bought in your mock portfolio on Google Finance. Portfolios. This is where the magic happens. Here you'll be able to set up a mock portfolio and learn how to trade the market firsthand. We'll set this up shortly, but for now, let's go to the next item. Recent quotes. An option to have your Google Finance page keep a list of the different companies you research and have them in a quick list access on the side. Here for companies you're always checking out or investing in. Stock Screener. This is a cool tool to help evaluate companies. I'll show you how this works later, but no, it's another tool to help evaluate stocks. Google Domestic Trends. This is a special feature specific to Google. Google Domestic Trends track Google search traffic across specific sectors of the economy. Changes in the search volume of a given sector on Google.com may provide unique economic insight. You can access individual trend indexes by clicking on the left-hand navigation. The indexes are currently calculated only for U.S. search traffic. This is a search engine for trends, an awesome tool for finding the right time to both buy and sell, especially for long-term traders like us. Predicting long-term growth trends can be a very valuable investment if done right. Let's go on a quick tangent and check out one of my real-life examples of my strategy of trading ahead of a long-term trends. One of my monster trades was purchasing 200 shares of Netflix at $54 on January 13th, 2010. Which comes out to about $11,000 cash. At that time, Netflix was still just something the kids were talking about. There was not a large library of content, streaming speeds were still questionable, they did not create original content, and in general, were not yet a replacement for your cable service. Recognizing a product or company that is primed for success based on upcoming trends and advances in technology can be a great way to recognize a potential monster investment. It is important to discuss this now before later. Trading on speculated upcoming trends is not something I'm endorsing at all. What we're discussing here is specific to helping locate potential monsters that then require a lot of research and analysis before it's time to pull the trigger. To finish the example, 1 year later I sold the 200 shares at $211 on February 23, 2011, which comes to roughly $42,200. Subtract my $11,000 investment, and I'm left off with a solid gain of $31,200. Calculating percent gain, percent loss. Now, the cash is awesome, don't get me wrong, but the key to being a good investor is your percent gain. And the great thing about figuring this out is it's a very simple formula. Price sold minus purchase price divided by purchase price. The result will be equal to a percentage. So, as an example, if the result was 0.041, this would be a 4.1% gain. The way I convert from decimal to percentage is move the decimal to the right 2 digits and then put a percent sign next to it. May seem juvenile, but it's quick and it works. So let's put my Netflix example into action. $211 minus $54 divided by $54 equals 2.907. Move the decimal point to the right 2 and we get 290.7%. Not bad for a year